many, if not almost all, cryptocurrency firms, they have been designed to fail. And they are designed by people who are experts, people who really worked hard in computer technology, people who worked very hard in financial analysis and investments, people who got very good grades at the university.
Good evening and welcome to The Trend Show. My name is Hussein Robert and this is the show that puts you on a journey to understanding matters finances, entrepreneurship, business and leadership. Now today on the show we are having Mr. John Oduor, who is a marketer and is also having wide and bigger perspective knowledge in areas of medicine and those stuff, having done by staff in university, and also having Mr. Martin Mburu. Martin Mburu is a financial advisor. And Martin Mburu is also, has been a banker. So from a banker to financial investor, financial advisor. Now, on this desk today, before we start the show, I would want to inform you that we are having, this show is sponsored by Fortech Global Solution. And Fortech Global Solution is an organization that is venturing into tech world. And now what they do so much is to provide you with everything that pertains tech. And today, they're having very good offers for you, starting from smartphone to laptops, to tablets, to antiviruses and everything. If you have an issue with your charger and so on, you can visit their website, Fortech Global Solution. On there, they have stocks, whatever they are selling. And also, we can tell you that the people that are going to engage us, throughout this conversation, there is a gift at the end of the show. That is, we are going to buy you a credit. So please stay there, comment, chat, and follow us. Now, Mr. John, thank you so much for showing up for the show that we're having today, and I'm very happy that you're here and grateful. Mr. Mburu, same. Thank you so much.
You're welcome.
Now, the first thing is, I want to give you less than a minute. In 5 words, tell me who you are. In 5 words.
I am someone passionate about financial investments. That's me.
Someone passionate about financial investment. Okay. Mr. John, 5 words, who are you?
Well, for a marketer, it is very hard to speak in 5 words, but I am a sales and marketing person in the pharmaceutical industry. Yes, but my background is microbiology.
Okay.
Yes.
For you to develop, grow, and be successful, you need to invest and have a good, proper planning with your money. Being a financial advisor, Mr. Martin Mburu, I would request to hear from you. When we talk about financial investment in less than maybe 2 minutes, what do we talk about? What should our audience know or want to hear in financial investment? How do they need to invest their money at the end of the day?
Yeah, that's a very good question because, you know, ideally, when we are talking about money, money has a source.
Okay.
And people talk about financial institutions, they talk about financial markets, but we fail to respect the fact that this money came from somewhere. Maybe there was Mama Mboga in a certain market. She was able to sell her mboga, then she took the money to the bank. Maybe there was the matatu industry, the makangas. Once they took the money, at the end of the day, maybe some of it will be banked through M-Pesa and all that. It goes to the financial institutions. So the first thing that is so important for every person thinking investment is that money has a source. Financial institutions only channel the money they receive from people. So don't focus so much on trying to think about financial institutions, especially, and I give this as a caution, word of caution, if you have not studied finance, if you have not studied accounting, you really want to think more about the commodity than the institution. Because when you're thinking about financial investments, 70% is policy, laws, how this is going to be done and how it cannot be done. But that said and done, many people are investing in financial investments without a knowledge of what they are getting into. And that's why every single day you'll hear people have lost money, people are crying. It is because of one word. They don't understand the structure and the role of financial institutions. They don't understand how deep the financial markets go, how wide they go, and what they trade in. So, one of the most important things I say is this. If you want to put your money somewhere, put it in two places. One, put it somewhere you understand perfectly.
Okay.
You could be a farmer.
Okay.
You can reinvest that money. Or you might be a farmer, but you have an idea of putting up rentals. Do that. It doesn't matter the return. If you know how to do it and you know what it's all about, do it. That's the first place. Somewhere you know.
Okay.
Number two, put your money in banks. And when I say in banks, this is what I mean. Put it in a savings account. It's better to earn interest on money. Because when you put your money in a bank, you're protected by Central Bank of Kenya. It has done everything to ensure your money is safe. You don't really have to do anything. Again, Capital Market Authority is going to ensure, because maybe the bank is dealing in shares, it is dealing in capital investments. Capital Market Authority is going to protect you, all right? Those are two good places to place your money.
Okay.
That's the starting point. Somewhere you know, or in a bank,
Or in a bank.
period.
Mr. John,
Yes.
why do you think someone would want to save their cash in a bank rather than reinvesting or maybe doing something or saving it in any other way? Because there is also M-Pesa. You can be saving your money by M-Pesa, which is also a very easy way to save your money. But again, it's also a very easy and quick way to use it at the end of the day.
Well, I think it is because of the risk that you eliminate when you put your money in a bank. Because you are sure when you put it in a bank, and I think you could almost include some digital money platforms, which are almost, because today you can access most of your banks digitally. So I think the aspect of the security of it is what makes it the best option, especially if you are a young person who really, you know, you are just starting your job, career and all that, or you are just starting a business. I think you do not want to keep that money anywhere else except a bank. Sure.
Mr. John, I find it very funny because at the end of the day, in this, in our recent generation, you realize that as much as we have so many places that we can do our savings, and at the end of the day, we expect to get back the interest that comes with the savings, many youths are not really into bank savings, and they only open bank account, especially them that are in university, and accessing help loan. So they only open a bank account so that they can get the help. Why do you think the youths are they're not into this bank savings and so on?
Well, okay, let me use my example. In our times, when you got help, you just wait when, I think there was a message or something, then it's not a long time ago, but then you go withdraw nearly, some withdraw everything, and then you spend it as cash, or you spend it the first few months, then until you remain with what we used to call a manageable portion of it. We used to get, the highest was around 50,000. I think it's just the same. And then there's 40,000. So if you get 50,000, there's amount that goes to bursary, then there's a 22,000 you get. So you go withdraw 15, you buy what you need. But I think the saving culture has not been taught to our generation, the young generation, because we live in a time when people become millionaires very fast. So you know how to convince somebody that, for example, the digital space have really expanded the opportunities for people to get rich very fast. So somebody just become maybe, let's say, a media or whatever it is, within a short time, content creator and all that, they become rich. So how you are going to convince a young person who is in his early 20s or even late teen or even up to 30, whichever age, that, you know, if you save 10,000 every month in a bank and then we invest it like this, he cannot see how he's going to be rich. So I think that is a big thing. It's a culture that maybe people will have to learn, that eventually, whether you get a lot of money once or whichever little, you just have to saving it. That is the only way you can be assured that you'll have that money tomorrow. But because of that glamour that comes, people just becoming millionaires overnight, and a lot of people who can't explain. So, and these people will never say that they saved that money. You say they did a tender or they do this business, and so to tell them to save the money, then do that. They'll rather, so most of them will spend, a good number of them will never be rich. By the time they're in their 35 or age where they need to be more serious, or maybe a lot of responsibility comes, they no longer have the money.
Broke.
Yeah, they're still broke.
Now, well, that is a way that people are using money, and as we are having this conversation here, the end goal is to ensure that the youths understands the whole issue about financial investments and planning and how you need to work with your money. You talked about two ways of savings, yeah? Reinvesting your cash or working with the bank.
Yeah.
Now, are there any other means, like other means that people can use to save or do their money, apart from maybe reinvesting? Because, for instance, if you're doing online content creating, how are you going to plow back this? Maybe you have a camera and you have the audio equipment. What else do you need to? There is no business here that you are plowing back to. Your business is to get more content, to get more, maybe perhaps subscription and viewership. So any other means that people can use to invest their money that they have at the end of the day?
Now, that's a good question. There's a song we used to sing that has been killed.
Okay.
The song is, "Education is the key to success." And you know, it's a fact. Because every single skill you have is a potential business. Every single skill. If he is in microbiology, he can make business out of that. All right? If you're in journalism, you can make business out of that. Any single skill, from plumbing, construction, being a disc jockey, being a musician, all these things, they can be a potential business. Our major problem in Africa, we no longer want to have skills. People are looking for money. They are not looking for skills. And you know, in a market setup, you ask any economist, he will tell you, money follows value. It is not value that follows money. When you have value, money is supposed to find you. But because of a mix-up in the market, like my brother put it very correctly, sometimes you will find that people want to find the money before they have the skills. So if I know someone somewhere in government, I want to be given a tender, and I'm not good at it, eventually I'm going to mess up people. So the first thing I would advise people to invest in, this is what has made the developed nations to be there. We say everything is made in China and consumed in Africa. So how did it get to the point when China is manufacturing everything? Skills. You cannot make something if you don't know how to make it. That's the first investment every sane youth should make. You must invest in a skill. Whether it will give you money when you're a youth or when you're in your 70s, it's not important. Have a skill. That's number one. Number two, once you have a skill, then now find a way of getting an income. It does not have to be related with what you studied. Because you need an income to survive. You start with a skill. Whether it will give you money or not is a matter of time. Then you find a way of getting an income. Now, your method of getting an income, if it does not need reinvesting, this is when the skill comes in handy. For instance, you are getting money online, but you studied interior design. So gradually, you can start now preparing yourself using the money you're getting to become a certified interior designer. You studied journalism, ukakosa job. Then you find a job maybe in a hotel. The money that you're getting, because you have this skill, you can now start investing gradually in this skill to the extent you buy a camera, you start, you sort out your wardrobe, such things. Eventually, this job will have given you money to become what companies never gave you a chance to become. That's for a youth. Now, those who have managed to get jobs, it is obvious that it's a government requirement. Part of your money is going to be deducted for your retirement. Because if the government does not make it a law, people will not care. People don't care they'll get old. My friend, people don't care that they'll get old. That is none of my business. Like, that's something that is there. So when you get a job, one of the ways you want to secure an investment is to place that money in an institution that is credible enough to invest on your behalf. Okay? And such institutions, maybe we'll discuss them as we proceed. That's why we have financial institutions. In financial institutions, we say we have what we call depository institutions. In depository institutions, we have institutions like commercial banks, we have SACCOs. These are what we call depository institutions. They will handle your money for you, and they can give you credit, they can invest on your behalf. For instance, in a commercial bank, when you bank your money, the bank will not keep it somewhere in a safe. This money is going to be it's going to be lent to people who are able to pay back the principal and interest on the money. Part of that interest paid will come to you.
Okay.
Flip side, people don't understand, when you open and you run a current account in a bank, you're not eligible for interest. Because you can access your money, when you're running a current account, you can withdraw your money anytime, anywhere, isn't it?
Okay.
So that money has not been invested.
So they can't invest.
So what it means, your money, because you want it anytime, there's nothing we can do with it very quickly. By the time you're coming for it, like there's nothing we can do with it. So like more than 60%, not even 60, more than 70% of youths run current accounts. So there's no interest they get on their money. You're supposed to apportion some of your money and commit it to the bank to be invested. So you're supposed to fix it.
Okay.
For a commercial bank, they call it fixing. Yeah. That's 20,000 and above, whereby you sign a contract with the bank. I'm not going to withdraw this money for this period of time. So that you allow them to invest that money. They will lend that money. They can buy financial investment like money market funds. They can do bonds with your money. By the time you come to withdraw, there's some interest on that money. That is in banks. SACCOs run almost the same way. You deposit your money, they are going to allow you to get your money back. When a SACCO has what we call front office, FOSA, they operate like banks.
I think
right
there,
yeah,
we're going to talk about the circles, which is a broader discussion.
Yes, yes,
yes. On the same. At some point when you are giving that explanation, you talked about skills, building up your skills.
Yeah.
Mr. John, I would want to bring you on the same, because I know you are one person that is into these mentorship sessions and stuff like that. What are some of the ways that we can develop the skills that we're having as the youths, either for cash or not?
Well, I really wish I would give you a 1, 2, 3 steps, but developing skills is just developing skills. Like, it's work. There is no shortcut about it. You see, we must create a working culture among youth, a culture where people appreciate you for your work. You know, people are identified even by what they do, not only what people earn or what because how the country right now, how it is, you are celebrated if you have money. No one really want to care so much with how you get it. So you have everyone else wanting just to get that, and you want to skip some step. Even if you get to a job market, it doesn't matter the field or the course. Let's say, for example, you study music or whatever it is, and there's a process. Yeah, so skills are things that take time. Skills does not come overnight. It is not, you cannot leave a university and with full skills. No. Everywhere you go to an industry, you sometimes even a trainee, you're entry level, you are kept for a long time until you develop. So these are things that people develop over time. And the best thing that should happen to our youth, that we should be taught, that work pays, hard work pays. There is no shortcut, so that if somebody tells you, you need, you can take 2 years. I mean, the longer and the more commitment you put into whatever field it is, it will give you money, because whether you are a carpenter, you can scale it to whichever portion you want to take it to, or whether you are a doctor, whether you are whatever profession you are. So I think for me, what I can tell fellow young people about skills is majorly people should commit to the hard work of gaining skills and mentorship, because that is also another issue we have with young people. Today, people don't love mentorship. Everyone wants to be his own star. No accountability. They don't want to, listen to somebody. They just want to copy paste what someone did somewhere, and all of a sudden, so you find somebody who maybe can excel because he have some, let me call it talent, but because there is no mentorship, people make mistakes a lot of mistakes in the career, and then within a short time is back down. But if young people would commit to hard work and commit to mentorship, to seeking to be mentored, to be taught some of these things from people who have done it for a long time, I think that is the best way that young people can gain skills in whichever field. Yeah.
Okay. Remember, this show is live, and we are going live on Facebook, so you can follow the conversation. Give us a comment. We're going to read your comments today. And this show is sponsored by Fortech Global Solution. I mentioned, if you're having an issue with your charger, which charger yako inachomeka kila siku, these are the people that you need to contact. They have very good charger. And the good news about these people is that all their products, starting from a charger that is 600 up to computers and laptops and everything, the warranty is 6 months. So what happens, they're going to rectify and do you good service. Now, Mr. Martin.
Yes.
The difference between a SACCO and a bank, okay, and why would someone choose to work with a SACCO?
All right. Now, one thing, let's start with appreciating the fact that there is something we call liquidity. Liquidity is the ability of, in terms of money, it's the ability of money to be in a continuous flow. You want money to be able to penetrate every part of the industry so that every part of the industry can be able to move. So where you lack money, it's going to be a problem. And that's why you realize there's a major emphasis on banks than on SACCOs. For one reason, every sound economy must have what we call liquidity, all right? Now, what is the difference between a bank and a SACCO? The major differences are in their functions. Like, what is the main reason this institution exists? For a SACCO, the main reason they exist, it is savings and credit. And there's the cooperative part of it. So savings and credit, cooperative. So the savings part of it, if you're a young person and you want to save, please, banks won't be the best place for you to save. SACCOs allow you to save as little as 3,000 in a savings account. Most banks, if you don't have 20,000 shillings, you will not save. Like, you can put your money in a current account, it will earn no interest. But if you want to be in a situation you can be able to earn interest on your money, you need to go to a SACCO.
Okay.
SACCOs exist for saving and credit. That is the most important thing. Number two, there is the cooperative part of a SACCO. Cooperative means we can cooperate, we can come together. And you see, that's why, for instance, when teachers come together and they feel they want to do something with their money, they don't form a bank. What do they form? They form a SACCO. Because now that is a cooperative. Something is bringing us together. We want to cooperate for a common agenda, all right? When farmers come together, they don't form a bank. They form a SACCO. So it is also good for people to know, if you want to come together for a financial objective, you really need to think more of SACCOs than banks, all right? Okay. And that's very important, especially for young people. So the major difference, banks exist to create liquidity, and they also work very well for companies. If you're a company, I mean, you're not talking about 20,000, you're talking about millions, you're talking about hundreds of thousands. Banks may sort you better than SACCOs. So youths, my message to youths, think more about SACCOs. SACCOs are very good for youth. Think more about them so that you place your money. Don't wait until you have like 20,000 to fix it in a fixed account in a bank. Start with 3,000. Have discipline. I love what John has said. Youths don't want to work. Like, they don't want discipline. In order for your savings to grow, I mean, it's a lot of work. You deny yourself very nice things. You will see people wearing a nice shoe, but you will not wear that shoe if you need to deposit 5,000 that week. You will forego the shoe so that you can keep on depositing the money in a SACCO so that you can have your savings, okay? So that's the major difference.
Okay.
What do they exist to do? Banks, SACCOs. Okay. For beginners, if you want to save and if you want to access credit as a young person, banks are not your best choice. Go for SACCO.
Thank you so much. Yeah, we are taking a break, courtesy of Forte Global Solution, and when we are back, we're going to talk about the credit availability and so on, and still on the topic, financial investment. And this is the Train Show. My name is Hussein Robert.
Finding the right POS system for your business can eliminate a lot of manual entry and reporting errors down the road. One of the main advantages of a computerized POS system over a cash register is that it provides sophisticated and detailed sales reports. It's very accurate, that is, scanning is more accurate than punching in numbers. It also provides you with analysis, that is, the POS system allows you to manage your own inventory. Talk to us today for good quality and smoothless POS system. You can reach us on the number provided, or you can visit our website at www.forteglobalsolutions.com. Ever wondered how it would feel like to run your business without any hitches? Forte Global Solution is an all-in-one solution to your IT and marketing needs. Our services range from website development, application development, digital marketing, corporate branding, and customized client solutions. Msichelewe hata, we have what you need to take your business onto the next level. For more information, visit us at forteglobalsolutions.com or call us on the number provided above.
Welcome back to the show. My name is Hussein Robert, and this is the Train Show. Now we are talking about financial investment, and today, as I mentioned before, we are having Mr. Martin Mburu and Mr. Oduor John. Mr. John, I wanted to ask you a question. We've been talking about savings here, and Mr. Martin here. Now, what are the skills that someone needs for them to do the savings,
to be able to,
especially the youths?
Well, allow me first to say that I'm not sure if betting is saving, but I think it is there because people have money, and because there's free money, flow of money, betting firms will always be there. Everyone wants a fortune and all that. Let me start first by saying that there are many ways to save. I think those ones people can find on other materials and literatures on. You know, there are people who prescribe to you even what percentage and all that. Whatever amount you are saving, the bottom line is that you have to save. You have to save from the time you start. I would say from the time you start working. But if you can save even while you are a student and have that discipline, the better. But of course, many students may not always have that money or that enlightenment, and the main focus would be school fees. But any work you do, any employment, whether you are paid 10,000, 20,000, you must save a portion of it. That saving, as has been explained very well with my brother here, it has to go to either a bank or a SACCO. I mean, those are you don't save under your pillow. I mean, we went past that. Again, you do not save on through betting. You do not save on, sometimes young people, we confuse buying things with saving. When you buy a television, that is not a saving. Or when you buy new shoes or you buy a new pair of suits, because you are not going to, even if you are to sell it, you'll sell it at a lower value. So it is not a saving. It's an asset that is depreciating. So the way to save is to make sure that on every amount of money you earn, there is a portion that you are taking to bank. From this time you start working, not when things get better. You don't wait until you are paid 100,000 or 200,000, then you start saving. You start immediately. You have disposable income. Any money you get, you need to save. And portion, that one you can, depending on what you want to do with it, but so long as you start saving. So that's what I would say. But regarding the issue of betting, I think it is very unfortunate in our times that, again, we young people, we believe in very quick money. And because we know that, the betting firms knows very well that if everyone was to win, they are all going to collapse. And it is very simple. There's no rocket science in it. It's simple. There have to be so many people betting and very few winning. And so many people will always put 100 bob every single day. If, for example, you take 100 shillings and you keep in a week, that will be around 700. If you do it by 52, you know, it will be a lot of money. But if you do it for a whole year, but on the list there are people who bet more than 100 bob every week, and they win once in a while 5,000 in maybe 3 months. And you know, and sometimes they get a lump sum 10,000 in Enda Evo. So I think it's a conversation that young people need to know. While I will not say I don't bet myself, but then if you have to bet money that you can lose, something like you're sure even if you lose it, you don't mind. And it should not be daily. It should not be habitual that every single day or every week or every weekend you must have a long list of multiple bets, and and then it should also not take the entire of your mind, so that you are a time when you can do something productive, you are betting. No, that is not saving and that is not investment.
Okay. Now let me ask you before I move to Mr. Martin here. Which amount of money would you say that this amount of money is 50 bob or 100 or 1,000? If I lose this, haitakuwa na kuna ngori.
So allow me to give my personal perspective. Yeah. I know most Kenyans, we know these people who beg on the road. The amount of money that if I give to this person, I will still go home safe. I'm not saying that it's bad to give to them a lot of money, but such money, you'll find somebody removes from this pocket 20 shillings. Why don't you take 20? And you'll not do it every day. If the same person asks you for money in the morning, if you ask you in the afternoon, you say, no, I'm not. The next day, no. Until next week or after 2 weeks, then again say, now that time I've forgotten that money. And it's only 20 shillings. So that is amount of money you are sure. And it depends. For some people, that may be 50 bob. If somebody, it may even be, 10 bob. But make sure it is money that you don't, you lose it, whether you see this guy walking immediately after dropping that money in that box, and you see him running away with it, you just laugh it off. You're saying, okay, this guy was just a joke. So I think that is the amount of money that, in my opinion, we should reserve for betting.
Okay. Mr. Martin, on the same topic, crypto, I would want you to highlight the failures, because I know it has quite a variety of advantages, yeah. And the people who are investing in it, they have seen the fruits of it. But again, as they say, there is nothing good without the negative side. Yeah.
Yeah.
I would want you to highlight the failures of cryptocurrencies.
All right.
Yeah.
Now, when I talk about education, and education being the key of success, many people will not understand what I mean. So let me talk about something very unfortunate that is happening every day. Many, if not almost all, cryptocurrency firms, they have been designed to fail. And they are designed by people who are experts, people who really worked hard in computer technology, people who worked very hard in financial analysis and investments, people who got very good grades at the university. And they became unethical and discovered a quick way of making money from people and making themselves rich in the process. Having said that, now when you look at crypto, basically what you're looking at, you want an internationally recognized form of currency that minimizes transaction costs, all right? So that if you want to buy a commodity maybe in China and sell it in Japan or in Kenya, you really are using one currency. And this is a global, I can call it, it's a global currency. When you're talking about crypto, it has a digital aspect and it has a global aspect. Yes. And that is what makes it very efficient and also very attractive. Now, the flip side and the problem to that is, again, if you never studied finance in university, how will you be able to assess and know whether a cryptocurrency firm is doing the right thing? If today I asked you to go and review what it does, and as a checklist with the requirements of the Capital Markets Authority, how many people even know what is Capital Markets Authority? How many people have even ever visited the website of Capital Market Authority? Do you know there are many people who have savings account, but they have never visited CBK website to see the requirements of CBK and what CBK has to say about their accounts and whether they stand to benefit or lose. Away from that, if you don't have knowledge on crypto, there's a probability you're going to lose your money. And this is why. Look at many cryptocurrency firms. This is what they do. You start with investing your own money, okay? You put your money into it. That's the starting point. And for most of those accounts, you will not put anything less than 30,000. Some will go as low as 10,000, 3,000, no problem. But that 3,000 will give you nothing. Eventually, you want to keep on upgrading and advancing. So you start by putting money into it, all right? Once you put your money into it, you're relying on demand you cannot be able to quantify to make the value of that money you've put in to go up. What do I mean by that? If I've put in 30,000, I'm hoping that some miracle will happen so that someone will buy the balances from me. And let me explain that. What is buying balances? This 30,000 that you are putting into the system, somebody already in the system is the one to give you a crypto balance. For example, 3,000 could be one crypto. Who will give you that 3,000? It is not the company. The company has no crypto. The company is like a broker. They bring together people who have money. So today, if Hussein wants to sell his balances and Martin wants to join, the company is going to matchmake Hussein and Martin. So you are going to buy from me, and I'm going to sell to you. So if I want to exit, I have to find somebody who is willing to buy my balances so that I can exit. This is now what happens. When you start, it is very attractive. The first, we call it beginner's luck. The first 10% who will jump into it first, they are going to become millionaires. Fact. And I always pray to God that I can find those companies when they are starting. Because if I get in early enough, I'm going to be rich. That's a fact. But they are not interested in these top people who are going to invest first. They are interested in the ignorant people, the ignorant masses who will come running after they see people driving Harriers from their first bid. These people who are going to come running are the ones who are going to buy the balances of the first people so that they can allow them to exit. Eventually, you are going to be left with the crypto you cannot sell. Because who are you selling it to? Who is interested? When so many of you have come and you have bought the balances of these people who started the company, you have set them free. They put in their money. I put in 30,000. The same 30,000, you are willing to buy it at 90,000 because you have been deceived that there is demand that is growing and growing. You will come and put in your money. You will give me 90,000 for 30,000 I invested. I'm going to leave. I will go and start another company and await another group of ignorant people.
To come in.
Again, I'll pump in 30,000. They will come in and buy from me at 90,000. I will promise them, you are going to become rich. I'll switch off my phone. I'll start another one. These people are living in Runda. These people are living in top cities in the world. And if you're investing in crypto, I repeat, if you don't know, if you don't have a financial background, if you have not studied, like you've not done your own research or you didn't study finance in school and you are quite serious with it, it is prudent to avoid. It is prudent to avoid. People are losing money. Today, if you want to buy Bitcoin, where do you buy Bitcoin from? Is Equity Bank selling Bitcoin? Like, can you be able to buy Bitcoin from a trusted bank like Family Bank? So whoever is telling you they are selling Bitcoin to you, how sure are you they are going to sell Bitcoin to you? Maybe they are going to sell you something you cannot be able to sell to any other person, and at the end of the day, you've lost your money. So what I'm trying to say is, Hussein, it's unfortunate youths want shortcuts. Every shortcut that works never works for everybody. It works for the people who are knowledgeable, the people who are wise, the people who are experienced. So ukisikia watu wanaomoka because they're in crypto, it is not the ones who are putting in their money. It is the ones who studied in university. They realize there are some ignorant people who are going to give us their money and we are going to become rich in a cycle. Those are the people who become rich. So youths, again, we come back to our point. Place your money in banks. Capital Market Authority will not be liable for your losses because you are ignorant. But CBK is going to take full charge. You remember when Chase Bank went down?
Yes.
CBK stood for the depositors. And you see, that this is what we are looking for. I want to place my money somewhere where in case of anything going wrong, I'll be defended. Someone will stand up for me. And not to say that Capital Markets Authority is a bad institution, but when you're talking about capital investments, they are global. So they involve a lot of technicalities that are not there when you're dealing with a local bank, all right? So it's safe for youths. Please, if you don't understand crypto, just be humble. Put your money in savings. Put your money in a circle. Invest in your skills. Do a master's degree. Do a diploma, all right? If you're in construction industry, like make sure you are certified by NCA. That is an investment, all right? If you're a musician, buy a better keyboard. Buy a good guitar. But don't tell me you want to put your money in crypto and you don't understand. But if you want to do it, it's okay. Some of us are going to get rich. No offense.
Chances, yeah? As someone that is in this market, what would you advise the young people to invest on moving forward? Okay.
You must invest in territories you understand. You don't just come from nowhere and somebody tells you, you know, I buy potatoes from here and sell it to this place. No, you must invest in things you do not know. There's a book I recommend. It's a simple book, a very old book called The Richest Man in Babylon. Mm-hmm. If you read that book, it has very simple but good principles for saving, investment, and wealth creation. As simple and they look very ancient. But one of the things highlighted in that book is that one, you invest, you have to save first. And the saving has to be consistent. You must agree on a specific amount you want to save and be consistent, let's say for a year, and do it very religiously. If it's every month, do it fast. The principle is save first, then spend. A very hard thing to tell somebody who has a fat bank account that if you get your 30,000, 100,000, whatever it is, save first and then spend the rest. That is normally the principle. But number two, you must then identify a territory you understand. If you don't understand, then get people who are expert in that field. Yeah, do not go to maybe let's say an IT specialist, and then you tell him, you know, I want to import medicine. He does not know the regulations. He does not know what happened. He is a specialist in IT. So if you want to invest in a field, either you have to know that field or get information from credible sources. I think that is what I would tell my young people. But then you have to take some time. Do not rush into investment. Investment are things that you need to take time, study it, get to know the people who know that field, or get yourself to be in that field. Alternatively, you get yourself to that field. If you maybe want to invest in a restaurant, it's a long, go and work there and understand how it works. No, don't be in a hurry, because you could even have a rich uncle or maybe whatever place you get your money, and he gives you all the money, and then all of a sudden you are put up, and then you realize that you are not getting that money as fast as possible, or you maybe have access to credit. Then you just take it, and because you are seeing people have clubs, and then you open a club, then 1 month down the line you are going down, and you're going down and going down because you did not take time to learn. So the point is, don't rush into it. But if you have to go to, when you're going there, either yourself have knowledge of it or consult people who knows about that field. Do not go to something you don't know, and you don't know somebody who knows it, and then expect you learn it. Yes, there's an element which you have to learn when you are in that field, but then you do not go to a place you do not know. Otherwise, you'll go down and you'll never rise up. Then you'll start telling people, no, don't, you know, it's not safe, you know, it's not, no. So that's what I would...
More thing the area, yeah. Whereas it was you who never planned.
Yes, it was you who rushed because you saw somebody making money out of it. But this person maybe had worked in that field for a long time. He has already identified a lot of loopholes. You already know. So you have to give yourself time, and you must make sure you just identify the right niche for you.
Okay. Mr. Martin, I want to ask you, COVID came, that is last year, and it changed the landscape of business and investment. Some of the changes it came with that you can highlight in effect, how did it affect the financial investment area? Yeah.
So one of the major hit places by COVID-19 was the financial sector. And basically because, first of all, COVID affects people.
Yeah.
People run business. So if you affect people and they are not able to run their businesses, now what are the three major goals of a business? To grow, to survive, to make profit. When COVID came, there was no growth. Businesses were in survival mode. There was no profit. So when you hit people, you have hit the financial system. And now that profit was not coming in, for instance, if you supply tomatoes to a school and the school has been closed down, you will not make the money you anticipated from that. And then there was a lot of rechanneling of money from financial investments, from good investments, to now start dealing with the menace of the COVID-19 itself. So we started putting money into things that were not generating back money. That was very dangerous for business. Many businesses that had not cushioned themselves against such an event went down. And it comes to what he told us about saving. You have been in a business that is doing so well, you assume it's going to be well until you die. Then COVID comes. You do not have any amount you saved. There is no institution that is willing to lend you money because most of them don't even have the money to lend you. From a financial perspective, one of the major problems that really made COVID to become so bad on people was the amount of savings people had. And you know, China is one of the leading economies when it comes to saving. No wonder they were able to get out of it very quickly. It's not just about technology. You may have technology, but can you be able to pay the personnel that runs that technology? If you don't pay them and they decide you won't volunteer, what do you do? So China had both the technology and the ability to pay the people who are researching. So they were able to come out of it very quickly. Having said that, this is a very good lesson. One, on skills. Did you see people selling foodstuffs in Range Rovers? Yeah. How about those who do not have selling skills? You just sit in the office, you don't sell anything. I mean, you just watch yourself go down. Your friends who have selling skills are able to make some money until situations are good. Skills. I want to tell youths, look for skills. Don't be cheated that you're going to make money quickly. If there was a quick way of making money, politicians will be doing it. Sometimes I benchmark with politicians. If a politician is not doing something you want me to do, I will not do it. Because before I noticed it, he had seen it. Like crypto. Everybody will be in crypto in politics right now. That is what they will be using. In fact, maybe their salaries will be paid in crypto. I'm not saying it is bad, but you need prudence in something you realize politicians don't want. Because they have a lot of money, they know what is good for them, and they know what they want to achieve out of it, all right? So, COVID-19 has taught us to start saving. Okay. It has taught us to look for skills, very important. And it has taught us to follow rules. When we are told to wear masks, when we are told to sanitize, when we are told to keep social distance, if you don't do that, you die. So it has taught us. And you know, Kenyans have a problem because we are not the only ones, but Kenyans and rules, it's a problem. You want to overlap when someone, you don't even have a reason to overlap, that's when you want to overlap. You see somewhere written, usikojoe hapa, that's when you are pressed. All right? So we have learned now to keep rules, whether we like it or not, because your life depends upon it. And finally, COVID-19 has taught us those who are not serious with their education have suffered. Most government workers received some amount of money, despite the fact that there was COVID, all right?
Yes.
Many people who are able to jump out of COVID are people who have skills. Those who had no skill, like your business is your only thing that you have and it has gone down, the only thing they did was to cry. And they are the ones wiping their tears. There is no one to wipe your financial tears, all right? So youths really need to invest in skills. They may not help you today, but when such a thing comes, you're going to benefit.
Okay. In 1 minute, last thing that you want to say?
Since we are talking to the young people, I would say that the future belongs to the young people. And the future starts from now. We must really rise up to the occasion. We must stop the being lazy and just accept that for us to be the next leader or the next big person in the market we want to be, we must work hard, and that is the way we are going to succeed. Thank you.
Mr. Martin.
Yeah, first of all, let me say, Hussein, I heard you will, there are some people you're going to award. I would also want you to award them with my digital book.
Okay.
It's called Getting and Accumulating Money.
Okay.
So those who you will award, make sure I'll send you a copy of that book that you can send to them with their names on it. Having said that, youths must embrace hard work. You cannot work smart before you work hard. That's a fact. No matter how smart you work, people learn how to work smart from working hard.
Very true.
It is by going early to some place that you realize there is also another route. You will never realize that route if you first didn't take time to keep going, all right? So you don't find efficient ways of doing things without first doing something. So before you work smart, let working smart be a product of working hard. Working smart does not always pay, but working hard always pays. When you work hard, it will always pay, and that's a fact. There are people who have been employed not because they are so smart, not because they are very intelligent, but because they are diligent and they work hard. Let youths learn how to work hard. That's the main thing I'm going to say.
Okay. Thank you so much. I would want to say that, one, I'm very grateful, as I mentioned, and also, when you see me in front of this camera, I'm not the one who's controlling everything. I'm here because there are so many people that are behind the cameras, behind everything. You are receiving this content live on Facebook, and that means that there are people that are working on that thing. So in the first place, I want to appreciate everyone that is working with me on the team. Mr. Steve Correa, who is today's producer. My producer, Mudhoni, is not in today. She went for the sports because she's a very good person when it comes to sports. And now, Mr. Steve Correa, I'm very grateful and thank you so much, who is helping us to produce and to get things live. I want to appreciate Brian Kavalaji, who is working on the social media and sharing all the links with the people and engaging everyone that is participating online. I want to appreciate the director of this production, that is someone is telling me behind the camera that is the producer. But anyway, thank you so much, Kavita, and thank you so much, Kevin Bahati, for having produced the whole, being the director of these shoots. And thank you so much, the person that ensured that everything is working, be it the lights, be it the camera, be it everything, overall things. That is Yvonne Sure. Thank you so much, everyone. I'm very grateful. And let's meet on Friday, as we'll be having the shows that are lined up for you. Fresh Radio will be having 7 presentations, starting in the mornings, Akikwetu Rorowa show by Brian Kavalaji from 2 end. In the evening, we'll be closing with the fans of reggae. That will be Reggae Mania by Buju and Wasan. Otherwise, without much ado, I would want to say thank you to everyone that has really supported and followed the conversation. We are going to have another part of this discussion next time that we are going to create after discussing with the guest here, so that we get to this topic deeply. Now today was introductory part of it. We could not have started with the big stuff that if you don't understand, you never went to financial school, so you don't understand big things. There would be no need of us telling you big stuff that you don't understand. So this was very important, and thank you so much. Without much, this is the end, and thank you. Bye.